Welcome back to Currency Wars for 2015. Let's prepare the strategy for the week ahead. In the past month, the rand has traded in a range between 11.75 and 11.45. This signals that we are in weaker ranges as we go into 2015. This year seems to be a year that may be marred by low inflation and low growth prospects as the market looks for encouraging data from the developed world, particularly from the United States. Meanwhile, in Europe, the European Court of Justice advised that the ECB's outright monetary transaction program is in fact in line with the EU law, as long as certain conditions are met. And this was the result that the market had really hoped for. With the ECB all cleared for the quantitative easing after yesterday's ECJ's decision, all eyes will be on the next ECB meeting on the 22nd of January. Meanwhile, in the US, the December retail sales numbers came out much softer than consensus. The data weighed on the dollar, and this helped emerging market currencies to gain back some of their lost ground. However, in the local space, South Africa's PMI data for December disappointed and undershot the market expectations. The index slipped from 50.2 from 50.3 in November. And this slippage was driven largely by a sharp fall in the business activity index, as well as the new sales orders index. The BER noted that the magnitude of the fall in the business activity index was surprising, and they attributed the fall to load shedding and the cutbacks that have been seen by large industrial users. Meanwhile, retail sales numbers also slowed in November to 2.6%, down from a revised 3.2% in October. This was also in part due to the power outages. Right, now that we've seen the lay of the land, I'd like to welcome my guests today, Eerenstein from RMB and Cilliers from TreasuryOne. Welcome back, guys, 2015, and we're back in the saddle. So we've had, look, it's been an interesting December. We were saying offset how stressful it's been. I mean, the market's been extremely volatile. Obviously lack of liquidity in December is one of those drivers, but data certainly hasn't helped. And I mean, the power outages, power cuts in South Africa have been one of those things that we've had to consider. In fact, I don't know anybody now who doesn't own a generator. So this is the new world that we're faced with. Let's talk about the lay of the land. So let's look offshore first. ECB, let's talk about the ECB with regards to their quantitative easing program that's likely to come into effect, or the market's certainly expecting to see that. So let's just talk about, they've got the political issues. We've seen with this German pushback in terms of quantitative easing, there's been a lot of underlying fundamental issues that have been at play. What is your view in terms of where the ECB goes from here?
Well, I think they'll have to do something. Whether they do outright purchase of government bonds is a different story altogether. I think logistically it's a nightmare. Yes, they have the go-ahead to do it, but how do they do it? They might announce something that, yes, we're going to do something, but we'll give you details a little bit further down the line. That would certainly be a disappointment for the market, and you could actually see euro rally off that.
Okay, so you're saying rallying going back up to 120 levels?
121, 122, but then that's your opportunity to sell it again.
Okay, and then if we look at the cross rates, Andrew, I mean, that's really been the interesting scenario. So, we've seen the rand trading a lot weaker if we look against the dollar specifically, right up as high as 11.75. It has now pulled back, obviously, with this US data. What is your view around that interest? If we look at the currency rate against the euro, that's been quite an interesting scenario, and we were also talking about that recently, just with regards to the opportunities specifically for importers. What is your view around that currency rate?
I think that we might see the cross rates pull back a little bit.
So weaker, eh?
Weaker, as Andre said. I mean, we might see a euro pull back to 121, 122, but that's selling levels. But in that process, we might see the cross rates pulling back to its levels of the 1385, 1390. Once again, an opportunity to sell at that stage, or an opportunity for an exporter to at least take advantage of that. Importers at this stage, on the very short term, I would cover my commitments. On the longer end, for an importer on the cross rates, I'd sit back because the cost of forward cover is so expensive. And I really do think that we're going to see it go back down to the 1350, 1360 levels where it's currently, but I think the pullback will be there first.
So on the euro rand specifically, I mean, we were expecting to see further strength, but obviously an initial pullback just as we come ahead of this ECB meeting on the 22nd. You're saying looking up for that 1390 level, but let's bring it back to the US data, because I think still the big risks in the market this year that we can look forward to is the budget budget, obviously the potential for ratings downgrades based on all the power outages, etc. And then obviously the interest rate hikes that potentially could come forward from the Fed in the United States. So let's talk about the US data that's been out recently. It's been a bit disappointing. We've seen the Rand come back to that 11.50 level. What is your view around the US?
Sure, I think retail sales did disappoint. Yeah, but if you look at the data by and large over a 6-month period, it has been very strong. We've seen good non-farm payroll numbers, we've seen good ADP numbers, and that's really what the Fed look at. You know, one number in isolation is probably not going to change their view. You know, we've got a FOMC meeting this month, and it's going to be very key in terms of how they drive. How that drives policy going forward. I still think the US is going to drive. It's very strong. I think fundamentally they're in good shape, and I think the US is going to perform, and I think the US, they will hike rates in the first half of this year. And I think if it gives them anything else, it's just to give them breathing room in order to stimulate the economy if they need to. Because don't forget, what drives the US economy are long-term rates.
Long-term rates.
And as long as they stay low, I think the US economy is going to continue to grow.
Well, it is then about looking at the curve in the US. So if we're looking at the short end of the curve, obviously that's the vulnerability around the interest rate hike. But if that longer end also takes or comes under pressure in terms of it weakening, that's potentially pressure on the mortgage holders in the US, which potentially could cause problems down the line with regards to consumers, inflation, etc. What is your view around the Fed stance? I mean, we're looking at a Fed at the moment that pretty much has reiterated that most of the expectations have been met. They're still a little bit cautious around the actual wages that are being paid to those that are employed. So that's something to keep in mind. But going forward, in terms of the pricing of the US dollar, do you think a lot of the good news has already been priced in? So do you think that the market is a little bit overbought or too long dollars? Do you think that we're going to see a further pullback, or do you think that we're kind of fair priced at this level?
I think if you look at a very long-term trend, I think the dollar is still undervalued.
Okay.
You know, if you kind of look at the dollar works in very long cycles, and I think the dollar's probably going to continue to grow and get stronger over the medium term. I think they're the only economy that's really showing significant signs of strength. There's fairly mild inflation, and I think that's going to bode well for the dollar.
But global inflation is something is going to be benign this year. I mean, we've got lower oil prices. Oil prices, in fact, trading at levels that we haven't seen for years. So this is an interesting scenario, because that's where it comes back to this whole rebalancing conversation, especially in South Africa, where a lot of our production costs or the cost push pressures that we feel in terms of inflation is driven by the import of oil. So it's the Rand as well as the oil price, and that's been offset because of the lower oil price sitting around that $50 a barrel. What is your view in terms of, just give us a quick outline in terms of South Africa's potential for upside in terms of the rebalancing, and then maybe you talk about the risks around the potential for us to be downgraded. So let's start with the rebalancing and just give a quick overview.
A quick overview, I would say, if you look at the oil price where it is, and you look at oil as a percentage of our imports, that's now being halved. Very good for trade figures going forward. Negative on the trade figures would be your commodity sides, but we shouldn't underestimate the lower oil price. The lower oil price, as far as I'm concerned, puts a lot of money into consumers' pockets worldwide.
Yeah.
For years now, central banks has been printing cash, hoping that would go to a consumer. It never went to consumers. It went to banks and to it was invested there. Now it lies in the hands of the consumer. They can start spending that. If they do, I think manufacturing worldwide can start picking up. The demand for commodities could actually start picking up. So the oil price, vital to watch and see how long it stays at these levels.
Okay.
If it persists at these levels for a year, I think it's very good for world growth.
And for the disposable income of consumers. And then what is your view around the potential for a ratings downgrade in South Africa?
Well, I think we look at it and say, right, core inflation, and I think that's what we need to look at. I think headline inflation is very food and oil driven, and I think when you look beyond that into core inflation, there's still a fairly big divergence, and that exists in South Africa. It exists in the Eurozone, and it exists in the US. But I think from us locally, growth is a major concern. I think that's something that the rating agencies have highlighted ad nausea.
Yeah.
And if that continues to surprise on the downside, core inflation remaining sticky, opens up a significant risk of us being downgraded.
Okay.
Again, it hinges on what comes out of the budget.
Well, I think that's the key. So let's end it there. Let's have a look at where we think the view is in terms of the rates going forward. Thank you. Sorry, I have to cut you off because we've got a little bit of shortage of time. Right, now after that exciting discussion around where we are in terms of the risks and opportunities, let's have a look at where we can actually see this rand and certainly the cross rates, because that's the interesting scenario trading in the week ahead. So I'm going to open up with you, Andre. Maybe give us a view in terms of where you see the cross rates. Let's look at the pound, let's look at the euro, and let's look at the dollar rand.
Euro rand, let's look at levels going back up to its 1380, 1385 levels, and then after that down. So, but I would call a range of 1360, 1385, favouring the top. Pound, I would favour up the upside towards the 1775, but a trading range of 1750 to 75. Dollar rand, interesting one, I would call it a low of 1145 and a high of 1170.
Okay, so wide ranges this week. What is your view?
Yeah, well, volatility is there. I think to a large extent, I would look at, for the week ahead, I think the risk is to the downside. I'd say dollar rand, you're probably looking at 35.65. Euro rand, we probably might even test 1330, but then it goes higher.
Okay, so that in conclusion is the trading strategy for the week. Thank you very much. I appreciate you putting it on the block. And let's look at selling up in the higher levels. If you see the euro rand up at 1380, if you see pound rand up at 1775, and the dollar rand potentially up at the sort of 1165 levels, those are sell levels. We are looking for stronger levels on all three of those as we go into all the central bank decisions in the next week or two. Until then, you're welcome to send us any questions or comments to @CNBC Africa, #CurrencyWars410, or to myself at Brigid Taylor for your personal response to the FX markets. Until next week, good luck in the trenches.